Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. Macro Monday, let's take a look at some legacy charts and data. First, we'll take a look at the flows from global crypto ETPs. Last week, James at CoinShares here putting together another week on the graph for us, plus 195 globally from BTC, a little bit more from alts, still not much going on. Probably not much is going to happen until after April 2nd, just because that's how people are. They want to wait and see. What is the news going to be? What is the after effect going to be? Is there going to be continued negotiations? Is it going to be a one and done situation? And then what will the fallout be? So I think people in general are waiting on that. On the 30-day cumulative change for flows, we are starting to claw our way back to neutral. Not great, but something to watch, right? We don't really have much going for us here other than that IHS on the daily, which we'll talk about. But if flows can flip positive with a bullish reversal chart pattern, we'll take it. And we may not see flows flip positive in a bigger way until next week. If legacy breaks down further, flows are going to get super negative and angry. So you got to watch for the divergence. You got to watch for the correlations, because right now we're still pretty correlated to legacy, although I'll get to some charts at the end. We're starting to break away from tech a little bit. Saylor announced a big buy from last week. I think he has a little bit more in the Strife or whatever convertible note, blah, blah, blah. He's got some more money to spend this week, so he may be doing that now. Ideally, the whole market isn't just one person buying, but he is a majority of the market buying at the moment. Certainly, there are a few other companies that are also buying BTC, but he is definitely the lion's share. And if you're curious, this is his break even at 67.4. No, I don't think MSTR can go under. I don't think they're going to get margin called, regardless of any bear market. What will happen is just what happened in 2022, where the NAV will go below what it's worth. So you'll have a discounted value to NAV, effectively. That's not an impossibility. Again, it's very similar to a closed-end fund in that regard. There are some issues with yields and dividends and all the other stuff that he's doing, but I'm not really concerned with MSTR at the moment. We did have Larry Fink of BlackRock come out today or last week and talk about how the debt issues in the US could be a boost to Bitcoin. Always helpful to have some spokespeople that people know, right? Larry Fink, big name, big deal. We also have Saylor, on the other side of the spectrum, who's actually buying hand over fist. So we have a retail hero. We've got an institutional hero, both pretty gung-ho about BTC. And you could say, well, Larry's just trying to sell you his ETF. That's fine. But he's still saying it regardless of everything else that's going on. If we look at the basis for CME futures, it's all the way down here at 5.5%. So I don't think a lot of the flows that are coming in over the past couple of weeks have been basis related. I think those guys want to see a basis closer to 10% before they step in. This is approaching parity with risk-free rate. And I think they'd probably rather get paid for taking risk on whatever the basis trade may be. Just my assumption. And on a futures open interest dollar amount, we are back to the November 5th levels. So we've rinsed a lot of the futures open interest while price is still above the November 5th level. So I will take that as a win for now. And if we look at MSTR, still a mixed bag here collectively. Ultimately, what I really care about is being above the daily cloud for any chart, no matter what it is. So if this can get and hold above 360, 370, into Q2, that's where you want to be. We are flirting with some bullish reversal stuff, W, falling wedge, channel, pitchfork, midpoint. This could take a long time to play out. I don't think it'll take 8 months to get an answer here like it did last time, just because we've already consolidated for quite a bit here. But it's certainly one to watch. On the leveraged BTC side, you can also watch BITU on the 4-hour. I like to watch this stuff on a slightly lower time frame just because it moves a little faster, and you can generally see the higher time frame patterns anyway, just as you did pre-October into the election. You had a triple bottom IHS breakout on the cloud there. And going forward, probably looking for about the same thing. You have an IHS on spot. You may see this on the leverage side. You may see this on anything BTC related. Not a call just yet. Something to watch, right? We are probably 2 to 3 weeks away from this actually triggering if it does trigger. But this first edge-to-edge move here is a nice 25% move. Should we get it, and it measures further, should we get some extension on that. So when there's nothing going on, there's plenty of time to figure out what your next move is going to be and to watch some things that are going to be worth trading here in the next couple weeks. Before we go any further, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to our trading style. You can check out Kraken Pro with a link in the description of this video. Non-investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payroll Ventures Inc., PVI, DBA, Kraken. On the 4-hour chart for BTC here, still holding above the yearly pivot, which is where we want to be. We do not want to drop below that yearly pivot. If we just play the pivot game, level to level, the next level down is 52, next level up is 120. Obviously, we are trending bearish here. We're still below the 4-hour. We're still in a 4-hour pitchfork that is pointing down. But just like on the daily, something to watch would be something like this, maybe. You know, again, it's not perfect. It's not textbook. It probably doesn't play out. But the diags here on the IHS are similar to the channel diags effectively. And if at any point in April we can get above this diagonal and ideally not make a lower low below 76, then we've got a shot. We've got a shot. And as for alts across the board, to me, I don't really see anything pending or worth trading on the bullish side just yet. Sol has a similar IHS setup that looks just as imperfect as you'd want it to look. On the Bitcoin side, you know, you've got this thing. Okay, then we can draw a diagonal here. The 4-hour cloud also tells you what you need to know. We're still below that. So watching some of this stuff on the lower time frames just to see if you get that short-term answer might be helpful. On the bearish side, the most bearish setup still pending would definitely be this Ripple head and shoulders, which looks to me very real. And I don't know what the probability would be of Ripple going the opposite direction of the market, but if we remain weak and just trading wherever the wind blows, I wouldn't expect Ripple to randomly move higher. So that's the measured move on the breakdown there. That would represent a daily bearish Kumo breakout for the first time since the bullish breakout in November. And for ETH, I really don't think there's anything to do here at all. It's not going to be a first mover, and it's going to require the rest of the market to pull up a bit. Really not seeing anything here. You could say there's a div, you could say there's an aggressive channel. Those are things to watch, but as far as a trade setup, I got nothing. You know, maybe there's something like this you can watch, but it's ugly, right? Now, when this bounces, if it bounces with everything else, then you're going to have people coming out here and telling you, I told you so, they're building all this stuff, XYZ, blah, blah, blah. And that isn't really why it's bouncing at the time. If it does, it's bouncing because the market's bouncing. It's bouncing because the SPY is bouncing. It's bouncing because BTC is back above 90, if we see that. But I think it's unlikely to see ETH above 3K anytime super soon. As far as the economic calendar this week, lots of Fed speak. We've got JOLTS tomorrow, employment data throughout the week, and the unemployment rate at the end of the week. Obviously, April 2nd is Liberation Day, Tariff Day. And next week, we've got CPI. No Fed meeting in April. The cut versus hike expectations currently pricing in a probability of doing nothing, which unless the data changes in a big way, that's probably a pretty safe bet. We certainly have a few more data prints before the May meeting. And hey, things might collapse with tariffs. Who knows, right? So anything's possible here. But it looks like we won't get a cut potentially until June. Still pricing in 3 cuts for the year, which may help us into Q4. If the market doesn't do anything in Q2, Q3 is generally a dud, especially September, then maybe we're setting ourselves up again for Q4 once all the rate cuts are in or are priced in, or the data is bad enough or the data is good enough or whatever, right? It's just too hard to tell early on pre-tariff, pre-liberation day. Truflation still looks great, 1.76, that's sub 2%, and it's been sitting here for almost a full month now. We'll see what this looks like post-tariff. There are a few things like used cars that could spike in price that could push this data higher. But for now, we are where the Fed wants us to be. We just need the Fed's numbers to catch up with these numbers and get there. If we look at the Fed's estimator for March, which came under expectations, under the actual print for PCE. The PCE expectation was 2.38. It came up at 2.5. Currently, the PCE expectation is 2.24. It was 2.07 last week. Some of this may be pre-ordering ahead of tariffs. So you may be seeing a mad dash to buy a bunch of stuff before, and then things calm down post-tariff. CPI still coming in at 2.47, the last print at 2.8. So eventually we will get there. It's just a matter of timing relative to the Fed meetings. But we're certainly headed in the right direction. And we haven't seen reinflation yet. That doesn't mean we won't see it, but we haven't seen it. So everyone calling for it, all the expectations calling for it, it's just not there. If you look at Goldman Sachs' own core inflation tracker, we're at sub 2%. Historically, I have no idea if they're right or wrong, but it's not just one piece of data that is printing things below expectations. If you look at some individual components, fertilizer index, it's always good to take a look at some of this stuff just to see if there's anything creeping up. Still above pre-pandemic levels, but looks to have leveled off for now. If there's some peace in Russia, or there's some potash thing, or et cetera, with any of the geopolitical stuff, this may continue to come down, or it may go up with tariffs, right? We don't know yet. We really don't know what's going to go on here relative to the rest of the world. And the same thing with the used car index that has been gently continuing to move down, still above the pre-pandemic trend. But if this starts to shoot up again because there's a 25% tariff on autos that are imported, then that will work its way into prices and insurance and repairs, and it'll just push everything else higher with it. And this has a pretty heavy weighting in the CPI index from memory. Looking at gas prices, basically flat throughout the year, and this is good. This is what we want to see, sitting there at multi-year lows. If for whatever reason this starts to spike, that will also eat into CPI and PCE and bring things more inflationary on the data. Looking at the Atlanta Fed's GDP now print, it was negative 2.8 last week. That's the most negative it's been this entire quarter. The gold adjusted number, still also the most negative it's been the entire quarter, at negative 0.05%. Now, what doesn't really make sense to me is that the New York Fed has us here at 2.86. So somebody's very wrong here. And it's just interesting that these numbers are so different. So best case scenario for markets is tariffs aren't as bad as expected. GDP is more positive than negative, and earnings are more positive than expected. The most bearish case would be the opposite true, right? Tariffs just grinding halt to global trade, tons of retaliatory tariffs in the headlines every day. Then expect everything to start to do continuously bad on those type of headlines. I won't pull up the UMich inflation expectation survey, not because it's not in line with where I want markets to go, but just because I think the data is kind of silly. There is a rise in inflation expectations here from the Fed's survey as well. So it's not just UMich, to be fair, but the UMich expectations are a little insane. I think a lot of those people have TDS who are answering that survey, but the market seems to really care about the UMich inflation expectations number. Looking at reverse repo, we have our typical end of quarter window dressing. If you look at the end of every quarter, there's typically a spike in RRP, and then it settles down throughout the rest of the quarter. So I wouldn't pay too much attention to this until we're deeper into April, but this does eat into liquidity. Money in the reverse repo is not in the ecosystem. So that is liquidity negative for the moment. We also have TGA debt ceiling stuff coming. We've got tax cut extensions potentially coming. So there are some liquidity positive things to look forward to in Q2. And based on the headlines that I've seen, Trump already wants to raise the debt ceiling. So that is positive for BTC, as our friend Larry Fink let everybody know in a recent note. So for DXY, still very much in the previous multi-year range here. Not currently headed lower. Doesn't really look bullish either. This could just be a vanilla bear flag. If this continues to break lower, eventually, because of liquidity, because of dollars seeking assets that aren't the dollar or dollar related, the dollar denominated assets should start to do well, including risk, including BTC. So the lower this goes, the better for crypto. Gold continues to push higher. It's now past its measured move from the previous consolidation. Still feels late to me. I don't feel like there's a trade up here. It is starting to cancel bear divs though, so that's a good sign if you're a gold holder. But this certainly needs to settle down before BTC can start to do well. If you'll notice, last time this quieted down was Q4 last year when risk assets took over, Bitcoin took over. So if gold finds a level and starts to consolidate, maybe in Q2, then I'd expect BTC to finally start to turn a corner. Looking at the bond complex, everything here really doesn't look terrible. TLT, the worst amongst them still. You've got various degrees of a low time frame IHS here on IEF, SHI's breaking out, and AG also has that IHS down there. TLT has a slow mover of an IHS. They're going to have trouble issuing debt, terming out the debt. That's probably why the 1 to 3 year bond is performing the best. But I wouldn't sleep on any of these as an option for something to do, some place to put your money. You know, you can also always trade these if we're in a massive risk-off situation. They've been bottoming for multiple years now, and I think the lower end still looks better than the higher end. And I like IEF over TLT personally. Here's a look at HYG, which tends to follow risk assets. This is the high yield junk bond ETF. All hope is not lost here. Similar to BTC, it's got an IHS possibility here. Just gotta wait and see. Based on where this sits, based on what's coming, I don't think anybody's expecting this to break out, but we'll see. It's an if this then that. If we can pull up to 79.50, then I'd expect this to do better. I expect BTC to do better. If this continues to break down, then I'd expect BTC to break down. These are pretty correlated in general. Looking at the SPY, it is in bearish territory on the daily cloud. It is making new lower lows. And this is what you'd expect in bearish territory, just as you expect higher highs in bullish territory. The last time we were out of this channel was going into Q4 2023. It's not that this isn't recoverable. It's just, it's hopium to expect it to recover here. If it does recover, it's going to take time, and it will tell you when it's recovered based on its position relative to the cloud once it gets back above again. So I don't really think there's anything to do here on the SPY, or the Qs for that matter, until we're back above the daily cloud. So Mag 7 don't seem like a go to me. Any of the tech sectors all look terrible. We'll take a look at some of those charts. And this stuff just needs time to either sell off harder or to reclaim some levels. But as it sits here now, it's below key moving averages. It's below the cloud. It doesn't have bullish momentum in it. So if you're a DCAer, I think you're probably fine throughout the year. But I wouldn't expect this to turn around quickly until we see some consolidation. The last down periods, you can see the average time, 2 to 3 months, and then you'd probably get your answer. But currently it seems a little early. SMH, very similar. This is the semiconductor ETF, mostly NVIDIA, and continues to make new lower lows. This may put in an inverted head and shoulders throughout the quarter with a neckline at around 230, but certainly not above the cloud, and doesn't really make sense to trade any of this here to me, especially if you think semis best days are behind it, at least in the near term. Mag 7 ETF, new lower low there. This could be a dragonfly, I think, similar to SPY and the Qs. You know, we could have hit some big stop loss levels at lower lows, and now we dragonfly, and this is the bottom. Like that's all possible. It's easier to say that in a few days once we hold the low. We haven't been able to hold a low here since we started to break down. Still in bearish territory, really nothing to do. You know, collectively, Tesla looks the worst. Microsoft doesn't look great. Amazon doesn't look great. None of these charts really look that good. I don't see any tradable patterns or anything on the Mag 7 collectively. The IGV software ETF also similar to BTC in its trajectory. If you line these up, they've been correlating, and just doesn't really look like anything here. It's back to a previous level. It's effectively back to like the 73K level for BTC, but I don't really see a trade or a setup here. You're getting high time frame TK crosses. The cup and handle certainly in jeopardy here. And a lot of this stuff just feels like wait and see territory to me. If we compare IBIT to the Mag 7 ETF, this does look decently okay. You know, we have a similar nested inverted head and shoulders ×2 versus Adam and Eve. Double bottom, you had a double bottom back here. It doesn't mean that BTC has to go up, but from an outperformance expectation, this does look more bullish than bearish. And the longer this goes on, the higher this goes on, the more eyeballs it's going to get. And the more you're going to have BTC back into the EM emerging markets conversation like we did pre-COVID. There was a lot of EM correlations, whereas now there's a lot of US tech correlation. So this looks very strong to me, as does the BTC TQQQ. TQQQ's triple leverage QQQ. A lot of the legacy bros like to just call BTC TQQQ. Well, we are outperforming TQQQ and have been for quite some time. And now we are approaching a new all-time high level here. I don't have a chart for it, but MSTR is also at all-time highs against Solana. So I think it's important if you're looking at beta or leveraged beta and you're comparing it to all this other stuff. And I think it gives you most of the time a pretty decent answer as to what's going on here. This is IBIT versus gold. No surprises it's breaking down, it's losing a bunch of levels. But this is also something to pay attention to. If we can start to pull up, if we can get some strength here against gold, if gold can settle down, then we can start moving up again on the BTC side of things. But these rarely move together. This is IBIT against GLD for those playing the home game. And then I thought I'd look at miners real quickly here, just flip through the charts. I haven't looked at these individually in a while, but if we look at the basket, WGMI continues to break lower on high time frames, well below any high time frame cloud. And this is the expectation as far as what you're probably going to see on individual names. Cores has continued to break down. And what are you looking for here? You're looking for bull divs, which Cores kind of has. You're looking for chart patterns. You're looking for oversold conditions. You're looking for channels that are starting to break north, any of that stuff. And it just feels a little too early collectively. Wolf way down here, broke down from this pitchfork channel and really never looked back. Just continuously moving lower there. This is on the weekly. It's below the weekly cloud. Clean Spark, same deal. Deep in bearish territory here on high time frames. On the daily, just no strength whatsoever. New multi-month lows for Clean Spark. IREN, same deal. Breaking down. Really not holding any levels. No strength there. A little bit of a bull div on that lower low. Marathon, right? All of these charts look about as good as you'd expect them to, in that they look awful. Bitfarms, just a complete puke lower. This is a new multi-year low, I think. And much like ETH BTC, this stuff doesn't just turn on a dime. It's going to take some fundamental changes, transaction fees, price turning around. This is leverage BTC effectively. So you'd expect this to be doing worse than BTC. But the problem with the miners is they never really outperformed in the latter half, especially November, like you'd expect them to. So if they're not performing better than BTC in a bullish condition and they're performing worse than BTC in a bearish condition, what's the point? This is Cypher completely just breaking down. BT, all these charts just look horrific. Hut had some news on the Trump family spinning up a new company and running mining. Okay, whatever. Like it doesn't matter here. This does not look good. And Hive, very similar. I think that's a new multi-year low for Hive. So to me, none of these charts look good on technicals. Fundamentals are a mess. And last week, we also had the headline that WGMI was the worst performing ETF of the year. So that's not going to help. Collectively, not much strength to be had. So in summary, we've got Unrate this week. We've got Tariff this week, and BTC still has a chance. Not all hope is lost. There is the possibility for an IHS here on the daily, but nothing really matters until we are past April 2nd and we get the market impact and digesting all of that news. That's all I have for this one. Toss me a like, dislike, comment, share, or subscribe, and happy trading.